Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 7th of May 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, as ever, let's kick off with a look at the overnight changes and price moves to be aware of. First thing I want to point out are the gains for some of the European majors against the US dollar, both the euro and the pound sterling gaining against the US currency. What is interesting here to note, though, that though the euro is up by 0.13% and the pound up by 0.22% against the currency, the weekly changes are somewhat different. The pound has hung on to gains of around 0.71% against the US currency, whereas the euro, of course, that weakened throughout last week, has yet to get back into the blue over the 7-day metric. Elsewhere, we saw a bounce in the Australian dollar against its US rival, the Aussie, adding 0.70, something of a 0.70%, I should say. That's something of a relief rally there in the Australian dollar for reasons that we'll look at momentarily. Elsewhere, the yen strengthened in the face of the US dollar, up by 0.13% against the US currency, and dollar yen trading with 110 handle, a figure we haven't seen for some time. There were gains for the US dollar against the Chinese yuan, where the US currency added 0.33%. Losses for the greenback against the safe haven Swiss franc, so the yen and the Swiss franc travelling in the same direction. But the dollar was also under pressure against the Canadian dollar, where it lost 0.19% against its near neighbour. Dollar index for its part reflecting that mixed performance, with a loss of 0.12% to start the session. On the back foot, I think it's fair to say. Okay then, what's on the calendar? Events that may move the markets today. Well, we've had quite a bit of data out of Australia already this morning, including retail sales, trade balance, that's imports and exports data for the month of March, and perhaps the cherry on the cake, the RBA interest rate meeting and decision for the day. So a mixed bag for Australia. Retail sales slightly ahead. Trade balance data, well, the actual surplus grew, but it was below the prior month of February. Nonetheless, the improving trade balance was better than the consensus forecasts. Imports and exports both falling by 2%, though, which perhaps is a slight worry there. We'll come to the interest rate decision momentarily. To come this morning at 6 a.m. GMT, we'll have factory data's order out of Germany for the month of March, so a chance to look at the state of play in German industry, following hard on the heels of the PMI data, of course. At 8 a.m. GMT, we're back in London for the first of the day's central bank speeches, this from the Bank of England member Cunliffe. At 1400, so after a decent pause, we cross over to Canada for the IV Purchasing Managers Index data for the month of April, both seasonally adjusted and non-seasonally adjusted. At 1535, we're back over the border in the States for a second central banker speech, and this from the Fed's Quarles. At 16:30, it's the turn of the Bank of England's Andy Haldane to give us a speech. And then we pause again until 23:01, where we'll get the British Retail Consortium like-for-like retail sales data on a year-over-year basis for the month of April. And finally, at 23:50, the release of the Bank of Japan's monetary policy meeting minutes. Okay then, breaking news and comment that's caught my eye. First of all then, US-China trade talks hang in the balance after President Trump threatened to impose an extra 15% of tariffs on $200 billion worth of Chinese exports into the US. And those tariffs, if enacted, would take effect from Friday afternoon. The Chinese trade delegation may not now travel to the USA this week, or if it does, may do so in reduced numbers and without some of the key Chinese personalities and negotiators in the party. Meanwhile, the Reserve Bank of Australia kept Aussie rates on hold for a 33rd straight month. Rates in Australia stay at 1.5%. Markets are, however, still betting on rate cuts in 2019 as growth and inflation in the country dip. Coming back to Europe, Turkey has overturned Istanbul election results, which showed a loss for President Erdogan's party. The sitting government has launched a new election date of June the 23rd, but the opposition parties have called the decision an act of pure dictatorship. And of course, the further that Turkey slips from an effective rule of law, the weaker the Turkish lira is likely to be. Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? As we've heard, the RBA kept rates on hold at this particular meeting, but the markets are still betting on a reduction in interest rates over the balance of 2019. Here are a couple of charts to explain what's happening. Let's look at this bottom one here first of all. GDP growth rate versus the annualised growth rate in Australia, both the quarterly and annual metrics heading lower, and that's a concern for the Australian government, although we're not quite in recession yet, and we haven't had a recession in Australia for 26 or 27 years. Nonetheless, the momentum is downward. That said, if we look at the top chart here, which plots composite PMI here in blue against employment change, there are some signs that we may have been bottoming out more recently and are starting to perk up. So PMI, so composite PMI is perking up and testing back towards 50. Hopefully we'll push back through there, and employment, which has been one of the bright spots for the Australian economy. Yes, the employment change data had been ticking down, but once again it started to pick up and looking a bit more positive as we head further into 2019, I should say. Coming to the table here, however, the market takes a very dim view of what's likely to happen to Australian rates. This is a series of forecasts from major players in the Australian interest rate and money markets, and their analysts have plotted where they think interest rates will be over set periods of time. As we head out to Q3 2019, you can see a considerable number of analysts are expecting rates to have been cut at least by 50 basis points at that point. And by the time we get into Q4, there are very few that's expecting rates to stay as they are, and some market economics, in fact, that believe that rates could be under 1% at that stage. So it's a mixed picture as far as Aussie rates are concerned, but that at least will create opportunities for currency trading during the course of the rest of the year. Okay, it's risk warning time. Please do take the time to read this risk warning, because trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative, and as I say, do take the time to read this risk warning thoroughly. Thank you for your time today.